What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If you're new to our channel or if you've been checking out our content, make sure you hit that subscribe button as well as smash the like button. Otherwise, you could share or comment right down below. It helps our content reach a wider audience and we greatly appreciate the support. So for today's video, we have a very special review to share with you guys. We're going to be going over the PNC Small Business Flex Line of Credit. Now, for those who don't know what PNC is, they're actually a large bank. I would say one of the smaller, larger banks, if that makes sense. So it's not quite a mid-sized bank. It is a large bank, but it's not as big as like Bank of America, Wells Fargo, Citibank. They have about $380 billion in assets under management. So just to give you a comparison, they're probably about 2.5 times the size of Navy Federal, which is the largest credit union in the United States. They are one of the most underrated financial institutions, in my opinion. They don't get the notoriety that they probably deserve. Now, they have a ton of great credit cards on the personal and the business side, but for today's video, we're going to be going over the PNC Small Business Flex Line of Credit. Now, this is a line of credit designed for small businesses. Now, in terms of the criteria, you do have to be in business a minimum of 3 years and earn anywhere between $100,000 up to $5 million in gross annual revenue. You'll also need a business bank account. It doesn't have to be with PNC. It can be from a different institution. You'll have to provide your tax ID number, EIN, as well as your social security. Now, it is a soft pull to qualify. If you do accept, there will be a hard pull. You also have to provide your latest business bank statement. A couple great features of the PNC Small Business Flex Line of Credit: it goes up to $100,000. There's no annual fee, no origination fees. And most importantly, you can get a decision within 1 business day. So anyways, let's go jump over to the application and I'll walk you through the process. All right, so here we are on the PNC Small Business Flex Line of Credit. Now, this is a line of credit that goes up to $100,000. There's no origination fee, no annual fees, and you can get a decision in as little as 1 business day. Now, PNC was actually voted the best brand in small business loans and lines of credit, and I'd have to agree with that. Now, the application process is very, very straightforward. You can get a soft pull pre-qualification and you can apply within 5 minutes, get a decision in 1 business days, and access your funds in as little as 1 to 3 business days. As it says right here, this will not affect your credit score, so it's just a soft pull to get an offer. Now, the qualifications, again, you're going to need to be in business for 3 years or more, a $100,000 to $5 million in gross annual revenue, and have a US-based checking account. It doesn't need to be PNC, and you'll also need your social security number, your tax ID/EIN, and your most recent business checking account statement. Now, in terms of some of the benefits, this is a revolving line of credit. So as you repay it, the funds are replenished. Another great thing about lines of credit is that you only pay for what you use. So if you do draw funds, the minimum monthly payment will be equal to 1.5% of the ending balance. So right here, they say they report all activity to the credit bureaus. All right, so on the first page of the application, it just asks for some basic information: your first name, last name, legal business name, email. So on the next page, they ask you, tell us how you plan to use your funding. They have different options: purchase inventory, increase working capital, cash flow management, repayment of debt or debt consolidation, emergency uses, purchase equipment, purchase vehicle, or other. So you could select all that apply. All right, so on the next page, it asks you to enter your primary business street address, business zip code, and business phone number. All right, so one other unique thing that PNC does is that they provide their business lending guidelines. Let's walk through exactly what the lending guidelines are. So here's their evaluation criteria, right? So the first attribute is going to be the personal credit history of the owner. So they have right here, business owners will be required to guarantee any bank loans. Therefore, a clean personal credit history of 5 or more years, typically with no recent 30-day late payments, is desired. Significant loan balances or open credit accounts can diminish credit worthiness. No evidence of collection accounts, charge-off accounts, foreclosures, unsatisfied tax liens, judgments, or lawsuits. That's why I'm always prefacing that you make sure that your personal credit profile is clear of any derogatories. That's number one. So the second evaluation criteria is going to be business credit history, right? So they say Equifax commercial credit report report. So a history of paying financial obligations of all types on time, no evidence of bankruptcies, unsatisfied tax liens, judgments, or lawsuits, significant balances, or open credit accounts can diminish credit worthiness. The next attribute they have is years in business, generally a minimum of 3 years in business under the same ownership for traditional business lending decisions. Other credit solutions may be available for newer businesses. Number 4, we have company financial trends, upward or stable trends in revenues, gross profit margins, net profit margins. Historically, operations are profitable. And this goes back to the tax returns, right? There's a delicate balance. And again, we're not tax experts or advising, but it is good to show that you had at least some net profits on your tax returns. Next up, business debt service coverage. So a business's earnings before interest, taxes, depreciation, and amortization must be more than its annual forecasted principal and interest payments. Number 6, debt to income ratio. The personal debt payments of the owners subtracted from their income should allow for about 60% left for payments of living expenses and taxes. Then they have leverage, a company's proportion of total liabilities to the company's net worth. Stronger companies have more net worth than liabilities. Liabilities typically should not exceed 4 times net worth. They also have payment history with PNC. So this is the relationship banking. If the company has borrowed from PNC in the past, no late payments and no charged off loans. Recent checking overdrafts, that's really important. Industry type, companies that operate in a volatile or cyclical industries must show longer time in business and strong financial performance. Net worth of the owners, and they also have collateral. So they're basically giving you the blueprint on where you need to be and what they're actually looking for to approve you for a business line of credit or any type of business lending products. So what you can do is look at this criteria, and if you fit the bill for what they're looking for, then this may be a viable solution. But I like the fact that they're actually telling you exactly what their evaluation criteria is before you even consider applying for a business line of credit or any type of business loan. All right, so let's recap really quickly the PNC Small Business Flex line of credit. Now, this is a line of credit that goes up to $100,000. You can get a soft pull pre-qualified offer if you do meet the minimum qualifications. Now, you need to be in business at least 3 years and earn anywhere between $100,000 up to $5 million in gross annual revenue. And you will need a U.S. business bank account in order to apply online through the soft pull. Now, and if you do actually go through with it, it will be a hard pull. Also, I would say this is going to be more for established businesses and established borrowers because they are looking into your personal credit history. Now, in terms of who they're going to pull with a large bank, it really depends. They can pull any of the 3. Based on data points, PNC is either going to pull your Experian on your Equifax, and on the business side, they're also going to be looking into your business Equifax credit profile to see what type of trade history that you have on that. So if you do have some established business credit, that will definitely help. And they're also looking to see what your existing debt liabilities are. So that's going to be both for the personal side as well as for the business side, the time in business as well as your industry. So if there's anyone out here who's interested in the PNC Flex line of credit, I posted a link in the description. That's all I wanted to cover in today's video. Until next time, y'all take it easy and we'll talk to you soon. Peace.